Hi there, Shingra here again with another update on portfolio performance over the past week. On a one-week basis, 6 out of 10 of the CBAM portfolios outperformed their respective benchmarks in what has been a relatively risk-off week, where it's been difficult to find pockets to find solace from the negative markets across both fixed income and equity markets, with only 4 positions returning positive returns, and out of those 4, only three of them delivering sub 0.5% positive returns. But notably there, we did see some rebound in the performance of our Hypnosis Songs Investment Trust, up 6.23%, alongside some safety trades here on concerns around the possibility of further interest rate hikes, or the central banks rather going too far in their fight against inflation. That would see European government bonds and US government bonds up more than 0.28% on the one-week basis. And then we continue to see those headwinds for Chinese equities, despite some improving macroeconomic data that we saw last week as well, where we saw fixed asset investment being the only negative macroeconomic indicator, and GDP also up 4.9%, industrial production also improving, and unemployment coming down. But obviously that was probably softened by the week prior, where we saw CPI inflationary data and current account data also disimproving, and investors really still continuing to have some reservations there across the property developer market, which represents more than 20% of Chinese GDP, and being where it is, that's where we'll see 3 of the main detractors from performance being across our Bailey Gifford, Columbia Threadneedle, and HSBC MSCI China equity positions. On a quarter-to-date basis, again, a risk-off quarter, where we've seen our more risk-on portfolios underperforming the more defensive fixed income-heavy portfolios, with CBAM 5 returning minus 3.24%, up to CBAM 1v2 returning minus 1.35%. And again, here we saw 2 of our positions only returning positive returns, and obviously we did see the safety in the shorter end of duration, and also that safety trade buying European government bonds, and also LNG short-dated sterling corporate bonds, those positions up 0.37%, 0.07%, and flat at 0% respectively. We continue to see some woes here on a quarter-to-date basis for the Hypnosis Investment Songs Trust, which is down 8.6% on a quarter-to-date basis. And we did see today, the 26th of October, where the annual general meeting for shareholders was conducted at Hypnosis earlier in the morning at 10:30 in the morning rather. And we did see, after the failed dividend payout of the previous week, there was some mistrust in terms of investor confidence, which would see a overwhelming 84% vote of discontinuation of the investment trust after its 5-year vote period had expired, and 84% again of voters rejected a £372 million sale of 29 of the music catalogues held within the investment trust, due to the deep discount at which this sale was going to be conducted. And again, current share prices seeing the investment trust trading at a discount of more than 50%, despite a 7% surge earlier in the day on the back of news coming out of the annual general meeting for shareholders. Also today, we saw some news coming out of the ECB, European Central Bank, which left its base rate unchanged at 4% in today's decision, and really just continued to monitor those macroeconomic factors. That was in line with market expectations as to the change in interest rates. US GDP coming up stronger than expected, 4.9%, on the back of stronger spending from the government and house builders, alongside consumption remaining fairly robust. And then earnings season has been fairly encouraging, with a lot of green that we've been seeing in terms of earnings per share and broader revenues being reported by companies. We did see a positive report in terms of cloud computing businesses from Microsoft, and a negative positive report coming from Alphabet, and would be keenly looking forward to Amazon Web Services earnings report today, where a lot of attention there will be on the cloud business unit as well, and just looking at those big 7 companies to get an impression of where equity markets might be heading towards the rest of the year.